Happy Sunday, everyone. Thanks so much for tuning in to the channel. I'm cryptoFOXXY, and today we are going to talk about 10 of the most common mistakes that people make in crypto. Trading can be very exciting, but it can also be very tricky. And so we're going to go over some of the mistakes that I've made myself, and hopefully this helps you guys along your journey to hopefully you don't make the same mistakes. But sometimes we have to make mistakes in order to learn. So let's jump into it in this video. Hit the like button, subscribe to the channel if you haven't already, or follow me on X if you're watching there, and let's get into it. I am trying some different lighting situations here, trying to improve my quality of video content. So let me know if you like the lighting and if it is working out okay. So let's get into it here. So some of the 10 most common mistakes to avoid in crypto. We're going to start with number 10, overtrading or trying to time the market. Sometimes people say, buy low, sell high. Well, yeah, but it's easier said than done at times, right? Because crypto moves very fast, and it's hard sometimes to try and time the bottom or the top for buying and selling. They can be very volatile. Overtrading leads to fees, stress, and often poor outcomes because stress leads to what? Emotional trading, right? And that's never a good thing. So sometimes buying and holding is easier for beginners. If you're just new into crypto, you might want to explore that before attempting any sort of trading scenario. So, stock holding the bag comes in at number 9. While holding onto a well-researched and solid investment, it can be a good strategy. However, stubbornly holding onto a losing asset just because you believe in it, I always hate that word, that term. I believe in this asset. It can be a poor decision. Don't become emotionally attached and take profits when you are up, and that sometimes helps alleviate some of that stress. Make sure you take profits off the table when you are up. Everything's not going to the moon, so you got to kind of be careful there. Not taking profits. This comes again. This is something that's very hard for new traders and even seasoned traders to accomplish. It's easy to watch your investment increase in value. It's harder to secure profits because investors can become emotionally attached, and that's always a bad thing. Taking profits helps remove emotions from trading, from decision making, and produces more return on investment in the long run. And this is something that I think everybody has trouble with. I know myself, I got caught holding the bag on a few different assets early on, and it's something that I try not to do now. And now, when I get into a trade, I'm going to say, self, take some profits when it hits this amount, or you're up this amount of money. When you start taking profits, you're able to sleep better at night, knowing if they wake up and your investment is down, you're not too worried about it, right? Not understanding the tech comes in at number 7. Many people will invest without understanding the underlying technology or the purpose behind the token, or even blockchain in general, or crypto in general. They hear that their neighbor has put money into this dog Inu coin or something and made 1,000x their money, and they think, oh well, it's pretty easy, I can do that too. Well, not always. And a lot of times people fail before they actually get that first 10 or 100x, right? Without having knowledge, it's harder to assess long-term viability and risks. Trust me, bro, is not a solid investment choice. And I even noticed one of my followers yesterday said that they flipped a coin. I'm like, oh dear lord. I mean, whatever works for you, but that's not something that I would try. Um, Falling for pump and dump schemes. So this can be very tricky because it's almost like in gambling when you're chasing your losses, right? You lose so much that you just want to win so badly that you're just going to keep putting your money into these pump and dump schemes. And sometimes these are coordinated efforts by groups or individuals that inflate the price of a crypto. There are groups of people sometimes that are launching some of these pump and dump schemes, and then they sell off and they leave the token worthless, and they basically leave you holding the bag. It's easy to get caught up in these scams if you don't understand the risks or look out for red flags. Like, do some research into the team that's behind it. Go in and ask questions in their communities. If they're not willing to answer questions and they're abrasive in their responses, get out. Don't trust them. Check contract addresses and things like that. Use a contract scanner, even something, token sniffer, anything that will help you assess if this project is not worthy of your investment. So, ignoring security is another one. Failing to use security measures like 2FA or keeping crypto on exchanges makes investors vulnerable to hacks or platform failures. Many people forget that they are ultimately responsible for their own assets and keep seed phrases safe and offline. Never put your seed phrase on your phone. Don't take a picture of it. Do not get your phone backs up to a cloud. And what happens there? Hackers hack clouds all the time. They actually have programs running that can identify a 12-word image, and then they immediately try it to see if that's a seed phrase. So please, guys, don't get scammed, and use safety measures. Don't keep all your funds in one spot. Don't keep all your eggs in one basket, so to speak. That holds true for crypto as well. Emotional trading. This is so important that I mentioned this several times in this thread. Letting emotions like fear, greed, or excitement dictate your trading decisions. Very, very common mistake. Emotional trading often leads to buying at the peak or panic selling during a dip, and this is a FOMO. People are scared of missing out, and if that's the way you trade, you're going to constantly be chasing green candles, and you're never going to make money. It's just one of those things. If you wake up in the morning and your investment's down, why would you sell it right away? If you made that investment knowing the facts and the tech behind it, or whatever it is you got into it for, why would you then sell it just because it's having a bad day? That's something, sometimes, yes, you have to take the loss and get out of something if you think it's going to, basically go to zero. You get some bad news about the project or something. That's one thing, but just panic selling over, a pullback and things like that is never a good idea. Trusting influencers. Some people might call me an influencer. I really don't think I have influence. I hope I don't have influence. I just want to be here to kind of help you guys along your crypto journey, and just kind of share what's worked for me and what hasn't, and give you guys the news and keep you up to date. That's it. Don't expect others to do your homework for you. While some might provide valuable insights, others could be promoting projects for personal gain. If I'm promoting a project that has paid me, that has sponsored me, I will let you guys know. I do not do that. Or people might simply be wrong. Like my advice might not. I don't give advice, but something that I say that I like about something might turn out to not be true. And don't take other people's advice or statements about doing homework. Don't believe everything you hear. That's, I guess, is what I need to say. It's critical to conduct your own research and before making decisions. Going all in is another thing I hear. I hear people going on about, what are we aping in today? Don't ape, don't go all in. Don't throw your money into something that you're not familiar with. Putting all your money into a single crypto or asset is a poor decision. Prices drop quickly, leading to significant losses. And diversification is very key if you want to make it in this space. I've seen some of my assets go to zero. I've had $5,000 into projects that have gone to zero. I've had $9,000 turn into a lot. There's different scenarios here. It's one of those things where, if you put all your money into one basket and something happens to that asset, or your wallet gets hacked or something along those lines, and it devastates you, just make sure that you have safeguards in place so that doesn't happen. So that brings us to the number one thing: chasing green candles, FOMO. This happens when traders jump into a crypto just because it's experiencing a sharp price increase in a green candle. This is a form of FOMO and can lead to buying at the top. And a number of times I hear people say, should I take my money out of this project and put it into this one because it's green? No. I will tell you guys, honestly, that has always got me wrecked in the past. I never take crypto out of other assets and put them into something just because it is going green, because that is just a recipe for disaster. You're going to end up putting it into this one who was just having a great day. It's going to have a bit of a pullback, and then you're going to go back to your other asset and like, damn, now that one's running out. Now I'm buying in and I'm getting less for my money. And it's just not a good thing. If you're going to buy and try to, scalp a little bit, and, something's going up and you think it's going to keep going, and you want to try to scalp a little bit off that, that's one thing. Have some, liquid assets on the side, maybe some money in some stable coins to do that, but don't take from other projects to put it into something just because it's green for that day. 9 times out of 10, you're going to end up wrecked, and it's just never a good thing. Plus, you have all those trading fees and things as well. So I hope this helps, even a couple of you. Let me know down below if you have any other tips. There might be some out there that I forgot about, or some that I just didn't have time to include. This is almost a 10-minute video, but I do hope that this helps some of you and, gives you a little peace of mind. And some of the things that everybody else also messes up in, it's kind of one of those things that it's nice to know that others feel and do things the same and make the same mistakes. So that's what I got for you guys in this video. Thanks so much for tuning in, and I'll catch you guys in the next one.